The 5-point entry approach always starts by asking you this one simple question. Where does your trade idea fail? As a trader, you need to know first and foremost, before entering into any trades, exactly where your trade idea fails. In order to do this, you have to have a very strict, rigid exit plan. Remember, once you enter into a trade, algorithms and market makers can see exactly where your stop losses are placed, or any of your trade orders for that matter, which means that you want to place your stop loss away from where retail traders would typically be putting theirs. Market makers typically time their entries into trades by taking out retail traders' stop losses. So in essence, a retail trader's stop out of the market will usually be institutional traders' entry into the market. And as a trader, you want to trade in line with the institutions or the whales. Why? Because they drive the markets. They have the most momentum within the market, and ultimately they dictate where price is going next. Retail traders typically like to use round numbers when entering trades and placing stop losses, and this is because they like to create order out of chaos. This is a psychological phenomenon. For example, they'll place their entries or stops at round numbers like 25,000, 25,550, and so forth. As a trader, you want to avoid these psychological round numbers when placing your stop losses. Remember, you want to trade in line with the whales or the institutions. Think of it like those fish. You have those fish that benefit off of a symbiotic relationship by attaching onto the bottom of a shark, and therefore they get a free lunch. And ultimately, this is the way you want to think when trading in line with these whales. Your trade entries are going to be absolutely crucial, and whether you're taking the high frequency trader approach or the investor approach, you still want to spread your orders around high probability areas of support or resistance. Both countries and institutions have been heavily wrecked in the past by pyramiding into their trades the wrong way. For example, El Salvador, MicroStrategy, ARK Invest, these are just a couple of examples. So don't assume that just because it's a big player which is in the limelight, that they're necessarily taking the most effective trade approach. Every effort that you make in trading should always look for new ways to reduce the risk by as much as possible. Throughout my trading career, I discovered that the 5-point trading approach has been what's worked absolutely best. So in the next video, I'm going to show you in a step-by-step methodical approach how you too can utilize this in your trading.